Okay, just to confirm that everyone can hear me before we begin. All right, so thank you. Thank you for time out on a Saturday to join in our conversation. We're talking about tariffs and the international markets for commodity traders, particularly in Nigeria and Africa at large. My name is Aibanua Ibaba. I'm a program associate here at Bestans, and I'll be moderating the conversation for today. Before we get into it, I just want to do a quick introduction of what Bestans is all about. We're an intelligence and consulting firm helping to unlock the full potential of Nigeria's agri-food system. So we imagine a Nigeria where agri-food are global leaders at the forefront of economic transformation. We ask ourselves, how do we turn that vision into a reality? So we do this through four main service offerings, which is financial, where we offer fundraising support, financial modelization, due diligence, funder capacity development, and the list goes on. We also offer value chain development services, market research, business strategy, feasibility studies, brand development, project management, and of course, value chain analysis. And then we also have export and trade advisory and policy analysis and design, which are the two focal points where our conversation for today pretty much falls under. We offer trade advisory, market insight and analysis, policy design and review. Basically, businesses understand how to navigate the local policy environment and global as well. Within a short time frame of being in the space now, our services have been instrumental to the growth of a number of businesses. We have a diverse team of experts with deep understanding of the industry, providing customized strategies to help businesses scale. So essentially, in one sentence rather, Vestance is all about helping agri-food businesses in Nigeria and Africa at large to scale. For our conversation today, we have two speakers. We have Razak Fatai, who is the head of research and advisory here at Vestance. He's an economist with over a decade of expertise in macroeconomics, business intelligence, and investment advisory. He has led several projects aimed at optimizing business growth, creating decent jobs, mobilizing transformative financing to Africa, and improving the results framework for development finance institutions. Razak has worked with notable multinational firms like PwC, Meristem, and the One Campaign, leading research and strategy on promoting decent jobs and food systems transformation. You're welcome, Razak. Thank you for joining. We also have with us on the call Yusuf Ogumbi, who currently heads the Commodity Solutions Desk at Meristem Wealth Management Limited, where he oversees the trading of commodities across the agriculture and energy commodities, design of investment for investors, and the provision of risk management advisory services to clients operating in the commodity ecosystem. Of course, it goes without saying that he's a highly skilled exec experience cutting across management consulting, investment banking, and financial product structuring, trade finance, and market systems development. And so we're in good hands today to have this conversation. So Razak, you're welcome. Yusuf, you're welcome as well. Thank you for joining us.
Thank you, Ivan, for hosting us.
Yeah. Good morning, everyone. Nice to be here.
All right, thank you for that. So just a brief introduction before we join in. I mean, we're hosting this conversation in light of a critical turning point in global trade. With President Trump back in office, the US has rolled out a bold and controversial tariff policy. It's already shaking up supply chains and triggering concern across international markets. There are two major changes, essentially. The first, which is a 10% baseline tariff on all imports into the US, and reciprocal tariffs targeting 60 countries. Nigeria is on the list of the 60 countries, and we are now facing a 14% import duty, which is one of the steepest in West Africa. Of course, this has serious implications for our top exports to the US, and we want to explore what this means for Nigerian traders. Are there opportunities in this disruption? How can businesses hedge against the risk, diversify their markets, and leverage intelligence to stay ahead? So I'll be weaving in a set of questions for our speakers, but this is a space for shared insights. Of course, we want to make it as interactive as possible. So feel free to request the mic or add your thoughts in the thread. So to get right into it, this first question goes to you, Razak. What ripple effects do you see these recent tariffs having on the global economy? And how might Nigerian traders be affected in the light of the African Growth and Opportunity Act, which now seems to be nearing its end? I'm going to have to bring Razak back up as a speaker again. So I've just sent an invite. I think there was a bit of a disconnection there.
Okay. While Razak comes back in, I think it's important to note that the US AGOA is a free trade agreement, is a trade agreement. I wouldn't say free trade, literally. It's a trade agreement between Africa and the United States, cuts across a number of items, a number of products. And African countries, some more than others, have explored this particular trade agreement to their benefits. I don't think Nigeria in particular has enjoyed or taken advantage of AGOA as much as it could. But then other countries, especially in East Africa, have taken advantage of AGOA to a large extent, and they've enjoyed the benefit of AGOA. One of the countries that, like I said, East Africa has been a major beneficiary of AGOA, and they have been able to leverage it. So as we approach the renegotiations on AGOA, it's clear that two things are very important. One, the United States that Africa used to know is no longer the United States that we have now. It's a very transactional situation that we are in rather than a long-term view kind of relationship, strategic relationship. It's a very transactional, America first kind of relationship, which is understandable because every country would typically want to put their interests ahead of every other kind of interest. As long as it's in diplomatic and mutually respected, mutually beneficial way, I think it's something that is fair. The second thing that we also need to know is at the point when AGOA was initiated, we didn't have something called the AFCFTA, the Africa Free Trade Agreement. We didn't have that. Now we have the Africa Free Trade Agreement. So what I'm trying to point out here is that yes, you would have a renegotiation. It will be tougher in terms of negotiating with the United States from an Africa angle. But we also need to remind ourselves as Africans, as countries, businesses operating in Africa, that we have AFCFTA to also leverage. And if we've been following the news, following trade transactions across board over the past few months, you would see that trade has increased across Africa from one part of Africa to the other. It's more ingrained in the regional economic blocks, ECOWAS, the East Africa Economic Commission. So you have all of those economic blocks leveraging it more than the broader Africa relationship. But we are beginning to see the early signs of integration across board. So for me, I think those two things are critical as we go into the negotiations, I think in the next 6 months, if I'm not mistaken. So they are critical as we go into the negotiation. First of all, it's going to be a more tougher form of negotiations for Africa. But then we also need to remind ourselves that we have an agreement that we have all signed. I think the greater portion of the African continent have signed and ratified AFCFTA. So we can work harder in deepening the trade activities that we have amongst ourselves and looking at trade activities across different regions that would be more beneficial to Africa as we move forward. More or less like not putting our eggs in one basket. So that's what I have to say on the AGOA front. I don't know if Razak is back and has anything to
add. Okay, I hear you. So this is essentially a call for diversification, for looking beyond what has always been the convention. I'm trying to invite Razak back up to speak, but I've not yet been able to get a hold of him. So I'm just going to go further into the next question I have for you, Yusuf, which is in light of the new tariffs. I mean, one of our major exports is crude oil, and it looks like oil prices might now be impacted. So what does this imply for government revenue and cost of finance for businesses in Nigeria? Can you share some insights on that with us?
So it's also important to note, thank you for the question. I think it's important to note that we're in the very early days of this tariff narrative. I wouldn't call it a trade war yet, even though we are getting to see the early signs that it may scale up to become a trade war. China imposed an additional 34% tariff on the United States yesterday. I think Canada already reciprocated earlier. Mexico also did the same. So it's likely going to be a trade war, but let's say we are still in the early days, right? So we still have a lot of room for, and you from comments that came after the announcement of the tariff, Trump said in his words, he's willing to discuss with anybody that brings him any phenomenal offer.
Right.
So it's something that is very much in the early days. One thing is clear, however, that an environment similar to what we have now, where we have tariffs flying here and there, is not good for the global economy. So if you look at also the financial institutions, analysts have put out since yesterday, said the risks of the odds of recession in the United States have increased. I think JP Morgan said the odds have increased to about 60% for a recession, which tells you that it doesn't sound good for the global economy. If you look at it from that angle, global economic slowdown is equal to reduction in the consumption of crude oil, and it's equal to the reduction in crude oil prices. As at this morning, crude oil prices were hovering around $61 per barrel for Brent, and that was down from, I think, around $73, $72 per barrel. So that tells you that, and our budget in Nigeria is pegged at around $75 per barrel, which means we are about $14 short of our budget estimate. So that's not something that the government would like to see. That's not something that is good for us as a country. We are trying to balance our FX situation. We are trying to balance the government revenue. So we are not in the position where we can begin to weather a storm similar to this, especially when it begins to affect crude oil prices. Anything below 60, the currency will begin to feel the effect significantly. I wouldn't be surprised if we touch 1,600 Naira, USD Naira 1,600 by Monday, if we are not there already on the parallel market. So that tells you that we are in a situation where we as a country, we're not in the situation where this is good for us generally. That's from a broad macroeconomic standpoint. From a business microeconomic standpoint, you then see the effect of that forex Naira depreciation against the USD. It's likely to bring back some of those inflationary fears that you see, especially if we cross 1,600 to about 1,650. It then spooks the fears that we have, and then the objective of the CBN to tame inflation and bring down inflation may be put into question. So if the CBN cannot bring down inflation, we are then caught in this high interest, high inflation trap, which is, according to economists, it can easily lead into a stagflation. Don't forget, we are just coming out of a tough environment. The GDP is growing slightly, gradually. And so we can't really accommodate those kind of situations. Hopefully, the negotiations work out well and we see some rally in crude oil prices. But I don't think our target of $75 per barrel is achievable this year. So we may be willing to look at something lower, maybe $70, $68 or $65 per barrel, given the current environment we are in. So that's what I have to say about it. Thank you.
Okay, thank you. These are interesting new realities that we have to know how to navigate, even as we see how things settle. Okay, we have Razak back up now. Razak, did you still want to contribute to the conversation? We talked about the ripple effect on the global economy and how Nigerian traders might be affected in light of AGOA. Can you hear me?
Okay, I can hear you. Like you said, it's not really benefited from AGOA, which is also a reflection of the fact that as a country we've not really done so much to try to diversify our exports beyond oil. So for me, I think that has been a major problem. We've not done so much to boost local competitiveness. So I agree with what you said. But on a broader look at the ripple effect of the U.S. Policy, as you would see, the U.S. is probably the country with the largest trade deficit in the world today. And in fact, it's in deficit with almost every other major economies. China being the largest, the main culprit, accounting for a quarter of its $1.2 trillion trade deficit today. So this fight for U.S. is a fight of competitiveness, a fight of boosting their own domestic production. And I don't think that's something that's going to end. So because if you look at Trump from the way he started, from his first from his first tenure as a president, and now coming and starting all of this immediately after he came in as a president, you see that it's someone who is very committed to what he wants to achieve. So with that said, for me, I think this is likely going to become, a full-blown trade war, as mentioned by the I think South Korean president. We're in an era of a new trade war. China has responded, like Yusuf said, Mexico, Canada. Vietnam is a major target. So you see, most of these countries would expect them to also find a way to respond. And when they respond, what will happen is going to worsen the situation. And like some researchers have said that the risk of recession in the US is higher. For me, I would say the risk of recession across many countries has become is now much higher. In fact, Nigeria is not even an exception, because if this war becomes protracted, we could, begin to see, cascading effect at every level, because it's a game of, trade contracting. What we saw when in 2018, when there was a mini war between the US and China, we saw trade contract. So there's a possibility. So there's a possibility that if this is not happening at a larger scale, we could begin to see, trade shrink and, prices transfer to consumers like you and I, in the form of inflation, which will reflect higher inflation and loss of jobs. So for me, we are in a very uncertain time, and that's something we have to live with. But ultimately, I think what Nigeria needs to do is to try to see how to leverage this risk, to see what kind of opportunities we can, capitalize on. But I'm a bit concerned that if we've not been able to benefit from our GOA in the past, are we in the position to benefit from what is to come? In terms of boosting local competitiveness, helping our businesses to lower the cost of production in a way that they can compete with other countries. Because as we see, we'll be seeing all sort of opportunities and risk factors to some businesses for whether agribusinesses or businesses in other sectors in Nigeria. So it's not a case of do we have what it takes to actually take advantage of those opportunities, and do we have what it takes to protect the country from the negative effect of this trade war. And right now, for me, I'm not sure I don't think we are really positioned to do that. But it's something that we need to raise the awareness to see what President Tinubu and other state governors can begin to do to create enough intelligence to track the issue and be able to better respond on where Nigeria can possibly win on this issue. So I would stop there, but I think Yusuf already did a good job trying to dimension some of the possible effects of this war. Thank you.
All right, excellent. Your response already ties into the next question I was going to have for you, which is how we see this triggering more protectionist policies, how it will affect access to markets for Nigerian exporters. So let me ask you, based on what you said, what do you think Nigerian policymakers can be doing now to protect and empower our local traders in response to changing global tariffs? This is to you, Razak.
Okay, so so the question now is, what can Nigerian government do to protect and empower trade? Like I've said, as it is, we are not prepared to export. And I'll say this in the context of the ASFTA, which you should mention. We talked about ASFTA, regional integration, but ASFTA itself is anchored on goods to produce. So oftentimes I ask myself, let's even say the ASFTA is there, up there for us to trade. The question is, what can we trade as a country? What can we confidently trade that we know that is different from what other countries produce? We have cocoa. Cote d'Ivoire has cocoa, right? We have sesame. You'll be sure that some other countries may have sesame. So beyond those traditional commodities, what are we doing as a country to add value to those products, to create distinct products, based on our own competitiveness, to be able to sell to other countries? So, and that's why I'll base my response on, to say that we have a lot to do to actually add value, and in a way that helps us to lower cost, the final cost of commodity that will sell to the market. And there's so much that can be done. But for a start, what Nigerian government needs to do, we need to invest heavily in trade intelligence systems, just like what is happening with this trade war. I'm sure some countries, more advanced countries, are already doing permutations and combinations to see what will happen, to see where the loopholes will be. But I don't know if Nigeria is doing this, and we're probably taking the sit-down look approach, to see how all of this happens. And so for me, it starts with intelligence. We need data to be able to see where are opportunities. For example, cocoa, we export cocoa to the EU, to some other countries who export chocolates to the US. Now, those countries are facing high tariff, which means chocolate will now become more expensive in the US market. So what happens to Nigeria producing the chocolate and selling to the US directly? So that would be an opportunity. But the question, are we prepared to do that? Are we positioned to be able to? So for me, you start with that intelligence to be able to see those loopholes and opportunity. Then secondly, we can then begin to, based on those opportunities, begin to, make some advances to certain countries, for favorable bilateral trade deals in this case. You say, we'll sell this to you. We know you are facing this challenge from these major markets where you buy XYZ, and then we would sell this to you at so price, based on our own calculation as well. And then we can say, okay, what do we need to do to be able to, meet up with those transactions, and then begin to think of where we need to put proper infrastructure in place to make sure that our products meet up to the required standards for us to be able to access this market. So what I'm saying is, I know that it's not something we can do in the immediate, but it's something that we have to do. Like, begin to identify those countries where we can begin to think about long-term bilateral trade. I know Nigeria recently started the Nigeria China agency that focus on Nigeria China relationships to be able to harness trade, and so I think we need to scale those kind of initiative in a way that helps us to identify maybe one commodity per country or something that we can really go big on and begin to see how we can provide support locally to be able to access those markets. Then the other thing that I think we need to do is because we are in a country where also where financing is a very big deal. It's very expensive to get financing to support business expansion, to invest in innovation and technology. So there's so much we also need to do as a country to fix, access to affordable capital. So, and what that means is we need to begin to think about creative ways of leveraging multiple sources of financing, whether in the form of diasporal investments, Nigerians abroad who can bring in affordable capital, or in the form of optimizing domestic savings, pension funds, and all of those asset classes that we can optimize very well and redirect to productive sector. So we need to begin to think about how to do all of this. But that would mean that we need to fix some broader ease of doing business issues like identity system, tax harmonization. The policy reform that we have recently on tax reform is a good one, but it means that we have a lot we need to begin to create. And we need to begin to accelerate all these reforms and bring them all together in a way that helps us to support growth in targeted sectors. So for me, I think we need to do that, lower cost of financing. And lastly, we need to build an export capacity, for our businesses through training programs, compliance certification, market entry strategies, so that it goes beyond just building capacity or growing production. You also need to equip people with the knowledge of which market they can sell to, what are the requirements in those markets, what certification do they need, what kind of technologies or packaging will best suited for them to easily access this market, and all other forms of support systems to help them to access this market are things that we need to begin to do. And this is what Vestance does. In fact, it's one of the core mandates to build export capacity. So I think we need to begin to work with organizations like us and many others to begin to see how we provide broad-based support to businesses so that we can begin to penetrate more markets. So I'll stop there. Thank you, Dano.
All right, thank you. I also love that plugin about Vestance. We offer export and trade advisory services. If you're just joining, this is a conversation about navigating tariffs and the international market in light of the recent tariffs on Nigeria by the United States. Speaking with me are Razak Fatai, who is our head of research and advisory here at Vestance, and Yusuf Okumbi, who is the head of the commodity solutions desk at Meristem. So moving away from government, let's look at exporters. I'll be throwing this question to you, Yusuf. Do you think Nigerian exporters are hedging against global trade policy risks effectively? And essentially, what can they do to position themselves as reliable alternative suppliers?
Yeah, I don't think we are. A lot of times for lack of a better word, we see commodity trading in Nigeria like just another thing. I just want to be trading commodities. We see it as something quite mundane, right? And I think it's one of the major reasons that a lot of the commodity trading firms in the country are, first of all, unstructured, one-man owned, very limited in their exposure. And that means that you can't really do anything out of the ordinary if you are that kind of company. If you look at most trading firms, just a very few of the trading companies in Nigeria have exposure to external firms, companies outside the continent. The bulk of us sell within the country, and that's all. So if you then ask, are we hedging our positions given the fluctuations we see in the market? No, we are not. Most of us are not. In fact, we are literally just waiting to see what will happen next, and then we try and see what we can do. Literally, that's what most companies are doing. In fact, most companies are not even having this conversation as we are having it now. How that would affect their exposure? What is the likelihood of how it will affect revenue? The exposure to companies operating in this country. So, take for instance, Vietnam and India are the largest buyers of cashew from Nigeria. India is also a significant buyer of our sesame. And the question I ask myself is, if the end market for Vietnam and India for the cashew market is the United States, that's where they sell the bulk of their products. And then the United States has slammed a 46% tariff on Vietnam, and I think a 27% or 24% on India. How does that affect me as a Nigerian cashew exporter or as a Nigerian cashew trader? We should be having this conversation. So it ties back into the intelligence conversation you had earlier, because it's when you have intelligence that you can then begin to try to derive value from what you have out of the information you have. So I think we are not hedging ourselves, and it's something that we need to pay attention to significantly as we begin to move forward. We need to move away from the old school, let me go and buy cashew in Ogbomoso and sell it in Ibadan kind of idea. We need to move into the point where we gather that intelligence, we leverage it, we anticipate the market. We are not just reacting to the market. So that's what I think is very, very important. This is common in origin countries like Nigeria, places where the commodities are grown and harvested. But then if you look at other markets like Brazil, they've gone way ahead in terms of their sophistication. If you look at other origins in Latin America as well and in Asia, they've become way more sophisticated than we have become. So we need to grow. We have the intelligence to grow. We have the people to grow. So we need to become way better in our ability to gather this intelligence and hedge against the market fluctuation. So we become more proactive rather than reactive. We are beginning to see a number of companies in Nigeria do this, but we need more and more of them to do this so we can become better at it as a country as a whole. Thank you.
All right. Zeroing in more on trade intelligence, can you expand more on the role it plays, trade intelligence and data, in helping exporters to anticipate and respond to shifts in global demand?
So intelligence is the lifeline of every trading company. If you don't have intelligence, you are literally just waiting for the market to whack you. That's what you are waiting for. You are only just playing on luck if you don't have intelligence and you're not working active with that intelligence. What you are doing is, let me see what the market will say. If the market is fine, then you go out, you play along with it. If it is not fine, then you sit out of the market and wait. That's why you see that many companies don't last generations. They just, once the original person that had all the knowledge, intelligence is gone, the businesses just close down. Many of us have stories of our grandparents, our great-great-grandparents selling cocoa, selling cashew, but then after left or when they died or became old, the businesses died along with them. Some of them were quite successful, so much so that they were probably the richest people in their villages at that point in time. So it's something that we really, really need to work hard on. It's no joke that you'd see global trading houses paying for Bloomberg intelligence. Bloomberg on a monthly basis as at the last time I checked, was 2,000 USD on a monthly basis. And then companies pay for this information so that they know how to navigate the terrain. That's one. Two, you can't build a risk management solution. You can't have a commodity trading business without having intelligence to build your risk management solution. Because trading is, first of all, risk management before even making the money. A lot of people think that it's the returns, it's making the money. No. It's risk management before you even think of how much money you would make. You first of all think about the risks you'll be exposed to before you think of the money you would make in trading the commodities. So if you don't have the intelligence, you can't really drive your risk management solution. You can't yourself. You can't prevent any form of significant losses that will wipe you out of the business. And that's why we think that intelligence is top priority. If you ask a trader in Kano State, for instance, that is selling sesame, if you ask him what's the price of sesame in Lagos, he would say, I don't know, but let me call my buyer in Lagos. So it's whatever the buyer tells him in Lagos, I would say, okay, this is the price, and then he walks around that. But then go to other markets, you have FOB prices being traded on a daily basis. You have CIF prices being known on a daily basis. You have all this information at the tip of their fingers because the intelligence is being gathered and people are willing to pay for that intelligence. In Nigeria, we are not willing to pay for it. Number one, so we would even gather what we are not willing to pay for. And it keeps us in a trap. At the end of the day, you have other entities coming into the country and taking advantage of that asymmetry that we have, information asymmetry. And it's good if you can gather it at this point, if you can pay the money to gather the information and take advantage of the asymmetry. It's also an opportunity. It's a means of an edge. It's a competitive edge for a number of companies operating in this space. So I think it goes without saying, intelligence is a priority that we must all pay attention to. If we pay attention to it, then we can continue to we can continue to operate within the short-term view that we operate in now. So that's
all right. Thank you very much for that.
Forgive me, if you don't have intelligence, no financial institution will support you.
Mm-hmm. All right. Well, thank you very much for your breakdown. That was very succinct. I think it's no secret that we have a very serious data an intelligence problem here in Nigeria, and we're really looking forward to see how the gaps are filled in light of recent developments. I'm going to ask you, Razak, do you see any role for Nigeria's trade promotion bodies, for instance, the NETC, to proactively market our commodities as tariff-friendly alternatives?
Thank you, Ivana. So for me, there's clearly a role for trade promotion. There's clearly a role for trade promotion, yeah, because fundamentally, if a country is trying to penetrate into a new market, Nigeria, for example, accounts for less than 1% of exports in the US, and so if maybe over the next 5 years we, as a country, want to do more, trade with the US, so we probably want to export more agricultural commodities, more value-added products. So basically, what we need to do is be able to anticipate, for example, what the growth in the US will be, and then be able to say, okay, we want to take a certain market share. So I'm using an illustration to say we currently hold 1% or less than 1% of US exports. So if we want to, for example, say we want to increase from less than 1% to maybe 1.5%, based on anticipation that demand in the US would grow, maybe, for example, for more value-added agricultural products, or maybe they want to demand for maybe African-made textile or something, or maybe we anticipate some of those changes. We can then, as a country, to say, okay, we've seen this opportunity, but the truth is the opportunity will not just materialize overnight, which is where the role of promotion comes in. To say, okay, we've seen that the US, has this market for this commodity, and as a country, would like to, export more, like, be able to meet some of the market needs, and we'll be able to do this based on some unique products that I want to sell. Maybe we want to sell, for example, African-made textiles or something. Want to make or want to make certain food products that that we think the market will really like. But to do that, we need to do a lot of promotion, which our agencies need to seal some high-level bilateral deals. We need to go on trade missions with some of our biggest investors, some of our biggest businesses, to visit to visit the other country, and then be able to, through that, be able to seal deals to say, oh, would buy this product for me if you can deliver at scale. So which is why trade promotion is very important. And in fact, most of major shifts that we've seen in growth in trade, as we've seen even with China. China started to grow its trade in US significantly after it joined WTO. You get so. And we've seen even several examples of bilateral trade relations opening up opportunities for trade. So which is why, as a country, we need to be very deliberate in promoting what we have. Because if you don't promote, people will not even know we have those products. If you don't promote cassava bread, or let me take that bread. Right now, cassava bread is not even popular in Nigeria. But if we can get it right to introduce that even into other markets, who knows? Maybe cassava bread will become a thing in the US, to become a thing in Europe. And that can form a foundation for the cassava economy to grow even more strongly in Nigeria. So the point is, or the conclusion here I'm trying to make, is that trade promotion, in fact, is is as critical as actually doing the actual production. Is as critical, is as important as doing that. And I would say that I see a major role for us to actually do more as a country to be able to penetrate more. And I see Nigeria is actually already doing. I've been seeing some movement around EU, Nigeria, horticultural market access. So there's been some work going on right now to get Nigeria to get access to the EU horticultural market. So we see countries like like in Jos and the rest that can produce these horticultural crops at scale and then enter the European Union market. But if we don't make efforts to deliberately talk to investors, to people who can offtake these commodities in those countries, we may never realize those potential. Thank you.
All right, thank you. I think a key theme of the conversation we've had so far is essentially that Nigeria can be doing more, and we definitely need to rise up and do that now more than ever. All right, just before I throw the last question for our listeners, anyone who has a question can request the mic or drop it in the thread, even as we begin to bring things to a close. So, this goes to you, Yusuf. What sectors or products in Nigeria do you perceive could emerge as winners or losers in light of global trade routes being rerouted?
So, especially in the ag space, right? I think cashew is a winner if the tariff sticks. So if before 6% on the 46% on Vietnam sticks and the 24% on India sticks. I think it's Nigeria is, so let me explain the supply chain. So probably would appreciate where some of these commodities would benefit. So cashew, for instance. So Nigeria grows cashew. Nigeria, I think, is number 3 or number 4 in terms of cashew production. So we have a significant volume of cashew produced in the country. We export the raw cashew to India and Vietnam. India and Vietnam then process the raw cashew into the cashew that we then buy subsequently in the various supermarkets. So think of the cashew you buy in the supermarket, the cashew nuts you buy in the supermarket to eat. Think of the same thing happening in the United States. So India and Vietnam are the ones supplying the United States mostly. So imagine if you then have a 46% tariff on that cashew going from Vietnam to the United States, and then you have a 17% on Nigeria going to the United States. That's a significant advantage. That's a spread of about 29%, if I'm not mistaken. That can even be that can even be way less than your profit, way more than your profit at the end of the day. So I think it's important that we begin to look at some of these opportunities to extend the operations we do in the value chain. So today we just buy and sell mostly. Can we begin to double down on processed cashew? I think that's something that we would see happening. Don't forget, Benin Republic, Burkina Faso, and Cote d'Ivoire have all banned the export of raw cashew nuts. So these countries are already processing their cashew. So why not? If we can do it, why not do that? The same thing happens to cocoa. The cocoa market is a bit more complex. But if you look at the tariff on Cote d'Ivoire has, I think, 21 or 24% tariff going into the United States. Cote d'Ivoire is the largest market for cocoa in globally. It produces, I think, around 45% of production. But then what this then means is that if Nigerian exporters can get act right, of standardization in terms of the grade that they're exporting, in terms of the quality, we have a 17% export tax going into the United States. Cote d'Ivoire has a 21 or 24%, I can't remember again, tax going into the United States. That means we have an advantage of about 4%, one. Two, I think Ghana has 10%. So Ghana is the one that would enjoy the most on board, even though they are facing some form of production challenge. So Nigeria has an opportunity in that instance as well. So again, these are all items, and sesame is another one. Can also process our own sesame to the quality that is required by the North American market, United States, Canada. We can begin to match that quality level, and all of these things are just a case of skills, a case of machines, a case of investments, whether in people or in physical infrastructure. And we can begin to carry out this activity, exporting to the United States as well. So I must say, nobody wants this kind of environment to be protracted, because it's a net negative for all of us globally. But notwithstanding what the market offers, we still have to figure out how to navigate the challenges that the market brings forth. And then I think those are some of the commodities that would benefit. In return, I think there's something I would also like to pay attention to. If the United States continues to be this aggressive about deficits and trade deficits, we may see Nigeria importing more of United States soybeans. We may see Nigeria importing more of maize from the United States, which we are already doing actually. We may just have to import more, and that is some form of challenge for the domestic market. So producers domestically cannot compete with the United States producers because they are productive and way more sophisticated than the local producers. So that's a challenge that we need to pay attention to. If this aggression continues and it spreads to other forms of products, it may force us to become way more productive on some of the commodities that we have locally. Soybeans is a key example. And don't forget, all these tariffs would force diversion of trade. So the United States sells a good chunk of its soybeans to China as of today. If China imposes a 34% tariff on the United States plus the initial 10%, which makes it, I think, 44%, and there's no tariff on Brazil. Brazil sells all its soybeans to China. Brazil sells, year to date, 73% of what Brazil has sold is to China. So if Brazil gains that advantage over the United States in terms of tariff, then that means that the United States needs to look for somewhere else to sell their soybeans. And Nigeria is the key buyer in the African market. Nigeria, Egypt, Algeria, these are key buyers in the African market. So we should also be expecting some of that redirection to come into our market and force the local market to adjust significantly. And I don't know, that's not good news for the farmers. The traders will figure out how they would navigate the market, but the farmers would pay the price for that redirection. So I think it's important to look at it in both ways. So we may gain some advantages in some commodities, but also pay for it in other commodities. So push and pull, as they say. Thank you very much.
All right. Thank you. So as we draw things to a close, could you share your 1 minute parting shot to essentially wrap everything up? Starting with you, Yusuf.
So I think nobody likes a tariff environment, but there's anything we have learned in the last 60 days that Trump has taken office in the United States is that regionalization becomes way more important moving forward. So we need to actively work on trading between and amongst African countries. We need to pay attention to it very much more. Number two, there's a likelihood of global economic slowdown. So as a country, we need to prepare for it. Are we in the position to suffer from that kind of situation? I don't think we are, but we need to prepare ourselves. We may be looking at one of the ways of preparing ourselves is taking a look at the inflationary environment, and it may become the new norm. It may become the new norm to see 15%, 16%, 17% inflation range. If this continues, because our currency will devalue, and then we may suffer for it in terms of crude oil earnings. It's also important that the commodity ecosystem needs to up its game rather. So we become sophisticated, we become more proactive instead of reactive. We become more knowledgeable. We take advantage of the knowledge base that we have access to, and we take more positions in the value chain so that we can accrue more value to the country as a whole. I think these are three things that we need to pay attention to. The world is not the same any longer. Globalization may be going into a reverse situation. Inflation and macroeconomic situation may become threatened if the tariff environment protracts, and the commodity ecosystem needs to become better in actually doing the job of commodity trading and marketing. Thank you.
All right. Thank you very much for that. I was going to throw to Razak to get his parting shot.
So I think my 1 minute speech is that everyone should for impact, because we live in an uncertain world today. And I'm saying this because since Trump came in, it's not just about trade. This is also about the reset of the global order. So it's fight for dominance, fight for control, fight for power, and the rest. So, and I just want to say that we may continue to see more of this, not just in the form of trade. We see our conflict in Middle East, and some other forms of tensions and politics is just kind of affecting value chains and the way we. So my point is that in all of this, I think we are in a moment where, as a country, Nigeria specifically, we have to be more proactive, like Yusuf said. We have to leverage data. I mean, not just make decisions based on politics. We need to see our government lead based on evidence, and also as citizens, as businesses, we need to try as much as possible to leverage data and intelligence as much as possible to win in situations like this, because it's likely going to remain like this for longer until maybe another administration comes into the United States of America. Who knows? Maybe the next president of America would even continue this and build on what is currently happening. So I would say that so as businesses, we need to constantly reevaluate our strategies. We need to constantly speak with organizations like Vestans, which is there to help to be able to stay ahead of the curve and to be able to make good decisions that could help win. And I'll say this based on a fact that if you look at some of the biggest or some of the wealthiest people in the world today, they made their money from crisis when crisis happens. Sometimes crisis is bad, but also crisis can be good for people who are able to take advantage of it. You see, during crisis, stock markets will go down. People who are smart will look at companies with good potential to invest in, and then when the upside comes, they benefit from the wealth. During crisis, commodity prices may come down. Some commodity prices will go up. So it's not left to us to be able to leverage the intelligence and be able to harness them in a way that helps us to stay ahead of the curve. That's the word. Thank you very much for having me.
All right. Thank you very much for sharing. I think it's clear from today's discussion that the evolving landscape is going to open up new doors for Nigerian traders, even while presenting challenges. It is a very real opportunity for Nigerian exporters to strategically position themselves in global markets, and it's all about being proactive, taking advantage of investing in intelligence and taking advantage of opportunities that are available. I want to thank all our speakers for their insightful contributions and everyone in the audience for joining in today. I've been speaking with Razak Fatai, who is our head of research and advisory here at Vestas, and Yusuf Ogumbi, who is the head of commodity solutions desk at Meristem. I just want to say that the conversation doesn't stop here. So we encourage you to keep sharing your thoughts, keep staying informed, and don't hesitate to reach out if you want to know the dialogue. We're going to keep monitoring these changes and bring more of these critical conversations to you. So stay tuned for future spaces, and until next time, like Razak, stay ahead of the curve. Thank you everyone for joining in.